Obviously, as we've seen, the pandemic has forced millions of people to work from home. Now, in years past, that could actually save you some money. You could declare a home office deduction on your federal taxes. Not anymore. The I-Team consumer investigator Randy Mack explains why the deduction was killed and if there is any way for you to still save on taxes if you're working from home.
If you were planning on a nice, fat federal tax write-off for that home office you established during the pandemic, the space, materials, utilities, and high-speed internet you may be paying for right now, think again. Spokesperson for the IRS, Rafael Tolino.
If you are an exclusive W-2 or salaried employee and you're working at home, you generally cannot take the home office deduction anymore, even though you're working at home.
Remember President Trump and former House Speaker Paul Ryan's tax reform of 2017? Well, it eliminated federal itemized home office deductions for employees. Now, only if you are self-employed, a gig or freelancer, and you use your home for what the government says is a regular and exclusive basis for your business, are you still eligible to claim home office deductions on your federal taxes.
You can take that. By all means, take it to reduce your bill, but do understand the rules first, and that's important.
State taxes are different. California's Franchise Tax Board has not canceled all employee deductions. If you're a resident, you can still write off things like union dues and other non-reimbursable work expenses, including a home office.
So if it's a dedicated area, then you're allowed to deduct a portion of your home office expenses.
Susan Lewis-Jones is a CPA and former IRS agent. She says break out a tape measure. You need to determine the amount of space you're using, or if you're utilizing multiple spaces with more than one person working from home.
So you need to know what is exclusive and dedicated for the area. It does not have to be a whole room. It could just be the office area. So you would need the square footage of your dedicated office area and the square footage of your entire residence.
The percentage of home office space you use gets applied to your household expenses, like rent, mortgage, or utilities. You may even be able to deduct some home depreciation as well, so long as California deems it as a reasonable business percentage. Lewis-Jones says this year it's never too soon to start addressing your taxes. With so many people's income and employment being impacted by the pandemic, she says seek help or at least clarity to address home office, unemployment insurance, stimulus, or federally backed PPP loans when filing taxes.
This is, I think, going to be a popular year for the tax preparer, as a lot of people should really go find that advice rather than just a Google search, because there's a lot of people who like to give you a lot of bad information on the internet.
There's also a lot of fraud, and the IRS is already predicting that this tax season it may take them longer to process income tax returns. Now, Lewis-Jones says that normally the IRS starts actually trying to match salaries and earned income in August or September, but all of that could be delayed because there's been a lot of identity theft and a lot of fraud related to unemployment insurance benefits. So it's possible you may not find out until much later that someone has actually filed an income tax return in your name, and it can take a while to untangle that mess. In Chino Hills, I'm Randy Mack for NBC4 News.